Hello, everyone. How are you? I hope everyone is good and ready to learn. Welcome to Logos College Online Learning. My name is Teacher Eric Mabunga, your teacher, and I am going to teach English for Banking and Finance 2 today. Before we start with our new lesson, we're going to have a review first. What did we learn last week? Did you remember? Okay. Last week, we talked and learned about cash flow. What is this? Can anyone tell me what is this? Yeah, yeah, you're correct. It is a real movement of company. Oh, very good. Next, anybody? Yeah, it is a payment in a currency, can be kip or dollar, from one central bank account to another. Another definition is that it is mostly used to describe payments that are expected to happen in the future. Cash flows are narrowly interconnected with the concepts of value, interest rate, and liquidity. It is a measure of ability to cover its intermediate and short-term debts and obligation, or describing how will you cover current liabilities using your current assets. Okay, so this is the illustration of cash flow. So cash flow to your business, finance, income, operation, and profit. Yeah, so there must be enough cash for all of these operations. Last week also we talked and learned about balance sheet. Anyone can tell me what is this? Did you or do you remember what is the meaning of balance sheet? Okay. These are documents showing a company's financial position at a specific date, which reflects what it owes or borrow and what it owns or what the company has or owns. Okay. So this is the example of balance sheet. So first we have asset. Yeah, there are two types of assets. We have current assets and fixed assets. Examples of current assets are cash, inventory, and accounts receivable. So this one you can have this amount from customers. Yeah, that can be paid to you or to your company. So total current assets here. For fixed assets, we have examples here, land and buildings, and the cost, the value of that land and buildings. Also the equipment and also the value of the equipment here. And less the depreciation. The depreciation cost is the decrease of the value of this tangible goods. And here is the total fixed assets. And total assets here is 29,000. For liabilities, we have examples here. We have current liabilities, examples, bank overdraft. This one, like for example, the customers withdrawn over the maintaining balance. That's overdraft. And also account payable that you need to pay. The company has to pay. So that is account payable. And here the total current liabilities. We have also long-term liabilities. Examples are mortgage, payment, monthly mortgage, for example, for land and houses, something like that. And also long-term loans. And then here, the total long-term liabilities here for this, the total. And then add here, and all together, the total liabilities is like here 125,000. Oh no, 12,500. So here is the capital. We have the shares or shareholders or investors. Here is the capital and retained earnings here. And the total capital here is here 16,500. So altogether, liabilities here, because this one is you need to pay, you need to give the shares. So it's 29,000, and also here 29,000 for assets. So it's balance. Yeah. So this is an example of balance sheet. Now, let's talk about income statement. Do you know what is this income statement? All right. Income statement, or it is called a profit and loss, is one of the financial statements of a company and shows the company's revenues. So what is this revenues or the income and expenses or the company spent during a particular period, for example, 1 year or by quarters, like every 3 months. It is also indicates how the revenues are transformed into net income or net profit. So this is like how or the indicator on how these revenues change to net income or net profit. Okay. Before we move on, we need to learn these useful words related to the income statement. First is revenue. Revenue is the income that a business has from its normal business activities, usually from the sale of goods and services to customers. Okay, that is revenue. Next is operating revenues. This one consists of the total sales from operation. Okay. Another one here is non-operating profit. This one shows that the company sold part of their business for a profit. Next, net sales. This is the money earned minus discounts made to customers and allowances for returned goods. Operating expenses. This one include COGS. What does it mean? It is cost of goods sold. Cost such as manufacturing, raw materials, and marketing. So, for example, the company has or is a producer of something. For example, like spare parts of cars or vehicles. So we have the manufacturing cost, or if you are manufacturing uh, like food or any other things that you produce. And of course, the raw materials, the cost of these materials before you manufacture, and of course, the expenses for marketing. So this one is operating expenses. Another one here is SG&A. It means sales, general, and administrative expenses. So this is what companies pay office staff to run the business. So include the salaries and wages, and of course insurances for staff and any other expenses. Next is depreciation. What is this depreciation? This is the decrease the value of tangible goods. For example, buildings or car. After like 2 or 3 years, it is not the same with the cost at first. So it is depreciating. It is decreasing the value, lower the value of that goods. Shall we say, for example, the car is, when you buy it at first, is 20,000. So after 2 years, maybe that car is only 12,000. You can sell it for 12,000. So this is the 8,000 is the depreciation cost. Yeah, the lower the value, or it only 12,000 the value. Next is amortization. So this is the decrease in value of intangible items. So for example, the brand name. So that is intangible items, the lower the value of intangible items. Okay? Or other like patent, like the trademark. Okay, that is amortization. The last one here is, what is EBIT? The meaning of this is earnings before interest and tax. So this one show how much the company has earned before paying interest on debts or income taxes. So these are the useful words related to the income statement. Okay, so please prepare your book. Be sure to have your book when you watch this video. Open your book on page 48. So this is all about income statement. So if we are doing this in class, I supposed to tell you to do this by pair. But since we are learning online, so I will just ask you some questions. So there are 3 questions here about the income statement. Who can tell me the answer for number 1? An income statement shows A, how many customers a company has. B, how much the company needed to borrow. C, how much the company earned and spent. Can you try? Yeah? Of course, the answer is letter A, no. B, no. And letter C, yes. This is the answer for number 1. So income statement shows how much the company earned and spent. Okay, number 2. The income statement is used with the balance sheet to A, find out about the financial position of the company. B, compare the figures. C, explain the balance sheet. The correct answer is letter A. Find out about the financial position of a company. Last question. Numbers written in brackets, like this one, 2 of these open and close parentheses, show numbers from the year before, negative numbers, or numbers which are estimated. What do you think is the answer? The correct answer is letter B. Letter B, that is negative uh, numbers. Okay, so I will end up this first video, and I will continue the second part later. So I will end this for now. and please watch the next part of the video. Thank you.